Okay, Peter, we are live. Welcome, everybody, to Wall Street Reporter's Investors Discovery Day live stream, January 7th, 2021. We have an exciting returning company for you today, Fabled Silver and Gold, Peter Hawley. Peter, welcome back.
Happy to be here, Jack, and to you and the people listening, Happy New Year's, and I wish you all health, wealth, and happiness for 2021.
Perfect. So, Peter, so the main thing is, our audience, obviously, they're looking for those 10x to 100x winning stocks. And let's, you released some impressive news yesterday, some results from, the big silver project in Mexico. So can you kind of explain to our audience what it's about, maybe in layman's terms, explain to us, what this means and where you're going from here?
Absolutely, Jack. And I'll back up a little bit to set up the groundwork for what we're going to discuss. Is the property, the Santa Maria property itself, it has little to no modern exploration on it. And the previous owners, what they did was they came in, they said, oh, listen, here's a vein on surface. We can follow it so far. Let's go drill it. And they did. And they came out with some great results. And then they said, well, let's go underground and have a look at it. And, okay, that looks very good. Okay, let's take a bulk sample and see how it behaves metallurgically and if we make some money. And they did that twice. And everything worked out. And then then I came into the picture and made them an offer they couldn't refuse, as they say in the movies. And we ended up with it. And the reason why is because the basic fundamental groundwork that should have been done wasn't done and wasn't done. And why, I don't know, and I'm sure they have their own reasons. But the long and the short is a resource was defined down to about minus 125 meters vertically over a strike length of 600 meters. But, and that's what they concentrated on. But on the property, there was known, or is known now, 19 other veins. There's 21 veins, and the 19 other veins have never been drilled or anything else. So I proposed a theory very similar to the mine I found actually just over the other side of the Sierras in Sinaloa State, is that the Peral carbonate basin we're seeing is very similar to what I saw in Coastal. And as such, there's certain, if you want to call it signatures, that it should have, if I'm right. As part of ground truthing that, the first thing we did was the first ever geophysical survey. And the thing about the geophysical survey, and we did two types. So we did one that was called total field magnetics. There's a lot of things you can do off of that. And then there's IP, which looks at resistivity, chargeability, metal factor, et cetera, et cetera, et cetera. But the IP can look down minus 500 meters below the surface, or half a kilometer. So we did this over the entire property, and as my previous discussions, I believe that there was, let's say, multi-pulses of mineralization, and there's structural controls, et cetera, et cetera. So when we did this IP survey, I was actually totally shocked at what we saw, because it was better than my wildest dreams. And as such, 11 new anomalies were outlined. So, and that leads us up to why we're talking today.
Okay. So wait, so Peter, so in layman's terms, well, first, I think for the new people in the audience, explain to them a little bit about your background, because I mean, you've been at this for a while. You've had a number of significant successes, in the area. So tell us about your background, and then in layman's terms, how big is this opportunity, and basically, when is the stock going to $5?
From your lips to God's ears.
The light is coming behind you. You look very saintly. So this is very auspicious.
I myself, I'm an engineer and a geologist. On top of that, I've been working for over 35 years. Probably, I don't know, 25 of the 35 has basically been concentrated in Mexico. I guess my original claim to fame, or by my own, if you want to call it that, was the creation of a private company in 1998 called Scorpio Mining Corporation. Went public in the year 2000. 2008, we had our first mine mill inauguration there. And today, the company, well, I guess it was about 2012, 2013, America's Gold and Silver bought us out. And that was, you know, I think the original financing was done at 40 cents, and it was $4 plus when we were taken out. But they are on the fourth deposit of the land holdings that we had that I
So you've had a number in your career, a number of 10 baggers, 20 baggers, mines that you've put into production in this area.
Yeah.
And this is going to be, so I guess the audience wants to know, is this going to be the next big Peter Holy success story? Because,
well, I'll tell you one thing, Jack, and this is the honest goodness truth to either the shareholders or yourself or anybody that knows me, is I have absolutely no intention of wasting your time or wasting my time on trying to make a mine out of something that it's not. You get people that keep drilling holes. I mean, I've seen people every time you have a resurgence in this. People come back, and there's properties that come out of the woodwork. I mean, I used to say to some of these people, "Are you sure there's any more mineralization there?" I said, "You've drilled it so much, there's probably nothing left in the ground." I mean, it'll never make a mine. It hadn't then, it hasn't. Normal rule of thumb from discovery to production is 7 to 8 years. Normal rule of thumb, if you have a real mine. And this thing has all the original signatures, if you want to call it that it could be a very high grade mineable deposit. And hence, as I previously discussed, over a period of 4 years, the previous people had drilled 9,600 meters. We started drilling in December, and by May we will have drilled at minimum 8,000 meters. So basically, what they did in 4 years, we're doing it in 6 months.
Okay.
And so, in 6 months, if you want to know if you have a mine or not, I'll have a very good idea, probably.
Okay, and how significant do you think that the opportunity? How significant is this project? The Santa Maria mine here.
I think it's significant for various reasons, and the first reason is that if you look at the other silver explorers in Mexico, not all of them, some of them have very good properties, but other ones, they're intersecting mineralization and everything else, but the mineralization is 1 meter, 3/4 meters, 1.5 meters, blah, blah, blah. Grades, occasionally they have bonanza grades. More than likely, most of the time they're 200 grams, 300 grams, and that's fine. But it's very hard to make up ounces. I think the beast that we're looking at is tens of meters in width, and if I'm right, and according to what the IP has shown us, that there could be more of these east-west trending veins other than the Santa Maria vein.
Yeah. Should we pop up the map on the screen?
Yeah.
Talk about and we'll go into let's see here. Okay, so so this is gonna so Peter, can you explain to us what we're looking at over here right now? And this is from yesterday. This is from yesterday's news release.
Yeah. So what we're looking at a plan view of the property. We're looking down at it from a bird's eye view, and all the weird little colors you see and everything else, that's actually the magnetic signature below the property. But placed on top of that, you'll see a total of 11 anomalies in kind of bars. And some of them have been circled with numbers on them, and those are the IP anomalies. What we did was we went ahead and we took 26 samples on the property over these IP anomalies. Now, To be perfectly honest, I didn't expect to get much values at all. Usually, when you're looking at an IP anomaly or something that's below the surface, you can imagine these things are anywhere from, I don't know, 50 meters or 150 feet down to 300 feet below the surface. So to have some sort of surface expression of mineralization or alteration or something to say, yeah, you know, that this is, gee, it's way below us, but it's showing something here on surface. So I was thinking, like, you know, if we're really lucky, we would have in the area of PPBs and in metal content. But lo and behold, Jack, you know, some of our sampling right over these anomalies where they're predicted that you would never ever think about sampling turned up, you know, close to an ounce of silver. And that ounce of silver, the source of it is sitting, you know, hundreds of feet below you. So if it's leaked up that distance and it's giving you this anomalous silver zone, gee, you know, what's down there at depth where it's supposed to be?
What? Okay, so I guess the main question is, okay, hang on, let's get to some audience. I mean, so let's get into some audience questions here. What's like how much, you know, how much silver, you know, I guess is how much silver could there be potentially here in layman's terms?
Gee, I don't know, because we've just finished our third drill hole as of yesterday. So if you're asking me that question after a week or two or three or four, I got a few drill holes into it. But the way, what I can say for a benchmark for everyone to understand this is, for a deposit to start becoming meaningful, it's usually about 50 million ounces of silver you want.
50.
50, yeah.
Okay.
If you're approaching 100 million ounces, you have a first-class silver deposit. Anything over 50 million, you're going to catch a lot of attention of people looking at you. So that's kind of the threshold of what you're aiming for. As I said, you know, in the next total of 6 months, we'll drill about 8,000 meters. This is designated at not only building out resources, but also showing the potential at depth, because this thing has only been drilled down to 125 meters below surface. I can say that I, as noted in the news release, that we started a drilling program. At the time the news release was out, we completed holes 1 and 2. Late yesterday, we just finished hole number 3. And so the way these holes were designed, Jack, is we stepped to the east of the known resource. So the known resource of 4.2 million ounces silver equivalent is over an area of about 600 meters in length and down to a depth of about 125 meters. So we stepped out 200 meters to the east based on what I believe is going to be a intersection of a north trending structure with east trending Santa Maria vein. And we drilled 3 holes from one station. First hole was at minus 45 degrees. Next hole underneath that at minus 65 degrees. And the next hole underneath that at minus 78 degrees. And it wasn't supposed to be 78 degrees, it's supposed to be 75 degrees, but someone screwed up. It really doesn't change anything at this point in time. But if someone was to ask me, why did you pick a weird number? It wasn't picked, it just, someone didn't do their job along the way. But the thing what I'll say about this is, with success, not only have you extended the property 200 meters to the east and added ounces already, but the third hole is or was proposed to hit the Santa Maria structure at minus 350 meters vertically below surface. That's almost 3 times the current resource. So you can imagine now, you're going 3 times at depth and you're starting to go sideways. So can you add ounces? Absolutely. Are they big ounces? Could be.
Okay, so as you said, the truth machines are at work. The drilling has started.
They are. Good time. Good time.
What and what? So you have three holes you're drilling right now, right?
Yeah, we drilled 3 holes. The assays from the first hole went in before Christmas, Jack. Assays from the second hole went in before New Year's. And I imagine it'll probably be another 2 or 3 days before the guys submit the assay from the or the core for assay.
And when can we see the results back?
I believe what will end up happening is the 3rd week of this month, you'll see our first drill results coming out, and a kind of a interpretation of what they represent in the greater scheme of things. And then on for every 10 days to 2 weeks, there'll be constant drill results coming in.
Okay. So this will be an exciting time. So we're going to see basically, it's again the truth machines are at work. So let's get to some audience questions here. We get a couple of questions that are kind of similar. So ML is asking, what would be the wow factor for bigger corporate?
Yeah, no, that's a very good question. The ultimate one was if I had 50 million ounces of silver or greater, and we just talked about that. But the other one is if we start intersecting very broad or wide zones of mineralization, they will certainly add ounces in a hurry, and people will pay attention to that because it's just common sense. It's a lot easier to mine something economically that's much larger than it is a very skinny little thing.
Okay, so I guess the question about would $80 an ounce silver kind of change the? I guess would that change things for you?
Well, yes, it would. But having said that, $80 silver, then all the tired old silver mines that the other guys have right now are making money like crazy. So maybe they're not going to go shopping. So
I think if we had even $50, even $40 silver, just with what you have now, the stock would be 50 cents. There's a
direct correlation. You can watch our silver.
And these markets, they're going to explode. This is there's look, there's a couple of again, gold, silver. These things are. I think most people agree now they're heading north. You have Bitcoin, which is almost 40,000 right now. Which is based on, but look, it's going to go high. But then at some point, people are going to go back to gold, silver, and you're going to have 3,000 plus gold. $50 silver. I think again, some of the gurus who've had on on a program, they're looking for $100 an ounce silver. So why not? Let's. Question here. Steve is asking, are you doing anything? I guess he's asking, are you doing anything with Sprott?
At this point in time, we're not, and I actually know Eric personally very well over numerous years, and he was investors in some of my other endeavors, and proud to say he's made money. We're a little too small, and it's kind of a show me stage right now. So if this drilling is successful, as I believe it will be, we could certainly see maybe Eric coming in as a investor. Yes.
Okay. A couple questions. People asking. Do you have enough cash on hand to, carry out your drilling program?
And more. And considering where the share price is right now, we're trading around 10 cents or 11 cents or whatever Canadian peso, I should say, probably. The original financing that we did earlier this year was at 5 cents. So some people have made 100% already, but there's $9 million of warrants in the money now. So whether they'll be exercised by the time the drill program is finished or not, I have no idea. And I will tell you that, yes, I do have more than enough money to complete this drill program. But if we're having success and I raise additional money or whatever, I'm not stopping.
So there's not going to be so there's no everything's fully funded. There's no dilution. Okay.
Yeah, we're in great shape.
Okay. A bunch of people asking about U.S. listing. what's happening over there?
Yeah, we've completed all the following requirements for an OTC listing. So it's out of our hands. It's actually into the regulators to look at that. Estimation on that, Jack, is the middle to third week of January for trading on the OTC.
What about gold?
Well, that's a great question Hanny put up there, because this is a silver gold property, or a gold silver property, whichever way you want to do it. I don't talk about the gold very much, but it's gold silver. You'll have 6 grams of gold, and you'll have 1.2 kilos of silver. There's a relationship to it. The higher the grade of silver, the higher the grade of gold. Vice versa. I think what would be fun to do, Jack, someday is, once the drilling starts, we'll start a not a betting game. I'd probably get in trouble if I did that, but say, name the highest assay. Is it 1 kilo? Is it going to be 2 kilos? Is it going to be 5 kilos? Take a guess at what the highest number will come out of drilling.
Here's this is a bit of a softball question, but I'll ask you. Okay, so if deposit will be 50 million ounces, actually, it's a legitimate question. So if you have a 50 million ounce deposit, how would that? What do you think that would? How would that reflect in the share price? So, like, what are we at? 20 something?
Okay, well, I guess the question, I'd have to answer the question with a question. If it was a exploration project with 50 million ounces, then you haven't done the economics on it to determine, what your profit margin is going to be. If it's a deposit with 50 million ounces, advanced stage with a pre-feasibility study and all that other stuff, then you know what your internal rate of return is going to be, what your cash flow estimates, your cost per silver per ounce, et cetera, going to be, So, I can't answer that. I wish I could, but I can't. I don't know.
Okay.
It would be a lot higher. That's for sure.
North of, let's say, north of $2.
Oh, that's reasonable. Yeah, sure. Sure.
So if you have, okay. So this guy's saying 7. Okay. I haven't done the math. But okay. So Peter, things are looking good. At this point, essentially, we're going to be watching the assays coming in.
Yep.
The assays coming in over the next few weeks. So here we got assays coming in. We got more drilling results coming in the next 6 weeks, probably, right?
No, you'll have assays in approximately 2 weeks for the first drill hole, 10 days, 2 weeks after that, another hole, and then it just keeps a chain. It just keeps going.
Yeah. So more assays, more drilling. It's gonna be.
And what I'm going to do and I haven't seen this other companies do this or not, and I've instructed the chaps to do this, is that we're going to photograph the core at extremely high resolution in its entirety from top to bottom. And as we get the results in, we're actually going to overlay those results on the drill core, that you can actually say, if I said, okay, this ran 1,000 grams, you'll be able to see the start to the finish. If I said this was 50 meters of whatever, you'd be able to see the whole 50 meters of what it actually looks like in its physical form. So I think that'll be quite educational to the public.
Okay. All right. So yeah, we're going to get a geology lesson in a few weeks.
Yeah, or sometimes they call it geofantasizing.
Perfect. Okay, so things are looking good. Okay, so I guess let's we're gonna have you back once you have the assays come back. But I guess at this point, in kind of to sum things up, our favorite question, always at these interviews is, at this point in time, based on where you are right now, what would you say are the top 3 reasons why investors should consider FCO today?
Okay, 1 is track record. Number 2 is, people have heard this probably before, grade is king. So no matter what the metal prices, if you have high grade, you will survive the day. So I think this is a property that grade is king, and it will be demonstrated. And I guess thirdly is, I spoke about management, but does management have experience or success in the country that they're operating in? And in this case, yes, I do. I know Mexico quite well. So
Okay.
those would be the three things, Jack.
Okay, excellent. Okay, Peter, on that note, I want to thank you. We're going to catch up with you after the next assays come in.
Yeah, next time we'll bring popcorn and I'll show you the pretty pictures.
Fantastic. Okay, Peter, thank you again.
Okay, thanks, Jack.
Okay, all right. Let's a lot of exciting things happening here. Let's get ready for our next presenter. Hang on just one sec. Let's just get things set up right now. Okay. Just stand by. Okay. Brad.
Hey, Jack.
How are you doing?
Happy New Year.
Happy New Year to you. Happy New Year to you. Where's the purple jacket? That was our lucky jacket.
We're gonna change it up.
Let's
change it. It's a new year. Let's change it.
So we have you see we have a new banner on the side, 100 baggers only. That's what we need today from you.
I'm excited. Let's go.
2021. Let me just get everything here set up. Okay. Welcome everybody to Wall Street Reporter's next Super Stock, a live stream for today's January 7th, 2021. Well, Brad, I'm looking forward to it because I'm expecting such big things from you. I'm already looking forward to September when the stock might be $20. But okay, so welcome everybody to the live stream. We have with us Skylight Health, SHG on the TSX Venture, recently just uplisted to the TSX.V. Still only over the counter. We have to get you to NASDAQ shortly, so it's still SHGFF over the counter. Prad, welcome back.
Hey, Jack. Nice to be back.
So, Prad, so the you're kind of starting off 2021 with a bang. Major news today. I think. Would you call today's acquisition announcement? I would say it seems to be like a transformational event.
It's transformational. Yeah, I mean, look, it's you excited? I'm excited. I was so excited yesterday. We've been sitting on this for months, and we haven't had a chance to talk about it publicly. We've hinted at it, talked about 8-figure size transactions. It's not the only one, but it's just exciting to be able to now have it out there, get on the show, talk about it. Put in front of our shareholders and investors what the real potential of Skylight Health is, and how last year was just, practice, and 2021, we start playing. So we got a lot more lined up, and we're just so excited now that this is out. Certainly transformative, but just the start.
Okay, so everything sounds good so far. So let's get into the details. So this deal is, this is from the highlights is basically this is going to bring your run rate up to 45 million revenues and 5.5 million EBITDA.
Yeah, and that's not talking any organic growth. That's just straight from the acquisition, coupled with the last few acquisitions that we've now announced and closed. That's not including organic. That's just purely as is.
Okay, so I think the key thing is like your kind of secret recipe here, the value add. I mean, this is not just like a roll-up play, which is the private equity guys. Your specialty really is taking these acquisitions and essentially 10xing their revenues organically through you'll explain what. But can you? And if you do this, so what does that mean? Does that mean you're going to do, 400 million in revenue based on what you have now?
Yeah, I mean, look, so we bring over 20 years of experience to this, right? And what we used to do really well is we would get drop shipped into clinics, and we would be told, you need to either make them profitable or you need to make them generate additional sources of revenue. And, we would be able to look at the cost structures, improve on them, usually see 10 to 15 to 20% improvement before we were done. But more importantly, we were able to find value-added services that benefited the patients. And these would be specialty services, paramedical services, allied health services, products, and we would find ways that would build on a patient's treatment plan. So if you were just a primary care patient, now you're getting these 4 or 5 other things. And from the business perspective, that means that you get to bill on those 4 or 5 other things as well, and it's all reimbursed through insurance. So when we look at every acquisition, and our thesis has been laser focused since we started doing this last year, we're buying primary care clinics, and in some cases subspecialty clinics, where we're going to bring tremendous value add to the existing business by enhancing what they already have, but then transforming it by bringing this multidisciplinary approach where it's a one-stop shop to healthcare. You don't have to go to these multinational or multi-location health networks to get the service. You can go to your community-based clinician and have all those services brought to you in-house. And we're going to do the same thing with the last 4 acquisitions we've closed. We're going to do the same thing with this acquisition once it closes. And there's a chance that the revenue usually on average is about $150 to $200 per patient per year. That's the average unit economic on acquisition, sometimes lower. And our target on primary care alone is $1,000 per patient per year. And then once you add in multidisciplinary services, that could go to $3,000, $5,000. And, some of our bigger competitors out there claim, anywhere from $10,000 to $12,000 per patient per year on their price target. And so, we have a long runway here of organic growth. The acquisition is just a starting point, but the way our model works is we're buying established practices. So we don't have to spend that 2 to 3 years to build a practice up from scratch, but we can take a practice where we know there's immediate room for improvement and growth. They've done a phenomenal job so far, but then we can add on significant growth from there moving forward. And that's really what we're going to do here with each one of these acquisitions, and from a capital allocation perspective, why every dollar we spend is going to be immediately accretive on day one, but then furthermore as we organically build up each clinic.
Okay, so Pride, give us the details on this clinic. I mean, the revenues, because the press release didn't really announce too much. I know there's like some confidentiality issues.
Yeah,
and that's going to be once you close, everything is once you close in the first Q1. I think you said. Yeah,
it's going to close this quarter.
This quarter, okay. So give us the details, revenues, where they're located, everything else, so people can imagine. Fill in the blank.
Yeah, so they've got over 6 locations. They're spread out throughout the state that we're acquiring it within. It's in one of the existing states that we are in today, so it further strengthens our position in that state as it is. They see upwards of over 100,000 patient visits per year, so it's a very active organization. They've got over 100 employees, over 30 healthcare providers that work for them, so it's a very structured company. On last year, they're expecting, I'd say but we'll be conservative and say 20 million in top line revenue. And that's been growing 15% year on year. So they've been seeing continuous growth within their own market. And on the bottom line, about $3 million in EBITDA. And again, I think that's conservative. I think that there's ways that we will continue to improve that further. So consolidated for Skylight now, we're sitting at about a $45 million annualized revenue run rate once this closes, and about a $5.5 to $6 million EBITDA run rate once this closes. And the beauty of the structure of this deal is, so we paid 4.7 times EBITDA. And if you look at the last few deals, I always claim is between 3 and 7. But we've been under the 5 times EBITDA multiple on all the acquisitions we've announced so far. But this deal is structured on both cash and debt. And so we only have to put up 40% of the cash. The other 60% comes through a seller's note. And that seller's note's it's a 3-year term, 8% coupon, but we can pay it back at any time with no penalty. and there's no further warrant kickers or stock kickers attached to this. So very clean deal, allows us to preserve cash on hand to bring on more acquisitions like this, so we can be significantly less dilutive on every acquisition and really get the value of the stock to grow. And on a cash balance perspective, we're still left with about $12 million once we close this transaction. So a lot of dry powder still to go and get one or two more of these kinds of deals. And again, we're looking at alternative ways of financing as well that can preserve that cash even further. So there's still a ton of upside in terms of what we have available to us. We brought the company down to a point where we haven't been burning capital, but now we're starting to make money, and that cash can be used to finance debt, can be used to finance growth, and we're going to be very aggressive moving forward here.
Okay, so how many after? Okay, you just raised some capital. You're doing this. How many, like right now, like after everything, like how many shares outstanding are you going to have?
It's about 170 million shares outstanding now.
Okay, so really you're kind of trading at, I don't know, 5x forward revenues. Seems like a pretty cheap number, no?
Yeah, I think we're at about 6.5 times forward revenues now, but still relatively undervalued compared to where you see other comparable healthcare peers on both the U.S. and Canadian side. But what we are starting to realize is that gap is closing as we continue to deliver. And one of the things that we're really proud of as a team is fundamental value drives the stock growth. So it's not about just putting the stock out and then hoping that we find something to hold it there. We are building that shareholder value by adding fundamental revenue, profitability, and teams behind the company. And so that's the other thing with this acquisition. We're getting a very structured organization. We're getting a lot of lessons learned, a lot of things that will help us nationally across our existing assets. All of the leadership and management are staying with the organization. And so we're very excited that, not only is this transformative from a P&L standpoint, it's transformative from an organizational standpoint. The bench strength here significantly increases, which allows us to be a lot more aggressive in the type of deals we look at, the size of deals we look at, and be able to ingest more of these type of acquisitions moving forward.
Okay, so we're going to open up to audience Q&A in just a second. I want to ask you just one or two more questions.
Mm-hmm.
Okay, so basically, you got, let's just call it, so 170 million market cap, roughly, 200 million market cap, roughly, more or less right now.
I think, on the Canadian side, I think it's about 250 now, or I haven't figured out where the quote is today, but yeah.
So basically, you're gonna have 45 million run rate, and that's before you do kind of the magic here, the operational excellence, which the goal is, I guess, is to increase that to 10x is the kind of the target with all the stuff. But let's say you're only half right. Let's say it goes to 200 million, right? So let's say it goes to 200 million. So at that point, and in 200, now how long do you think it would take you to get to the 200 million run rate when you start doing your organic stuff? How long would it take to get there?
I mean, look, we're talking within a couple of years at most, and even within the first year, we'll start to see some significant improvement.
We're gonna see things like happen. In other words,
yeah. I mean, we're always cognizant of how organic takes a little bit more time than M&A does, and the reality is both happen in parallel. We're not stopping one and doing the other one, and so we're constantly working at it. Usually, the first 90 days, 180 days is getting to know the business, developing that cultural relationship together, and at the same time starting to piece together what that plan is going to look like, and then we start deploying that into sort of the second quarter of acquiring the group. And so we start to see this return within the first year itself. But again, we're looking at transformative growth with each clinic group, and as we acquire, we're bringing the lessons learned from each clinic across the entire network. And so the rate of growth increases over time just because of the experience that's being put behind the addition of all those services. We're also bringing on great people. So like if you look at some of the last acquisitions we made, the Tennessee one, for example, great paramedical service. So same leadership staying with us, deploying that same model across all our other clinics. It leverages people to help grow the model. And that's ultimately the secret to how this model will expand and develop.
Okay, so in theory, I mean, I think there's two ways I guess investors could be looking at this. I think this is kind of the key to understanding the stock or valuing the stock is, it's not so much the existing revenues, it's really they need to keep their eye on what is going to be the number when you add that kind of X factor, which is going to be let's call let's say 5x to 10x. So whatever the number is going to be 5x to 10x organic increase. So in theory, I mean, this could be right now, if you do nothing else, if you stop right now, you just do your magic, you'll be doing, let's say, $200 million in 18 months, run rate. And, that's, what is that worth? 200 million revenue, the market would value what at 10x, $2 billion. I mean, that's, I think so. Well, I mean, because the market's paying for two things. One is, the growth rate, and number two is, the secret sauce. That's kind of the real value. I mean, it's the value add. So pretty impressive. Okay, so I guess the main thing is at this point is how fast can you grow? Because I think what investors are really looking for is, okay, how fast, and how far can these guys scale? Because then all of a sudden these numbers start extrapolating them out, and you could have a $5 billion market cap, in 12 months.
Yeah, I mean, look,
this pipeline in terms of acquisitions.
Yeah, I mean, look, what everyone should know is that this is experience led, and we are operators by training, and we are also strategic in terms of how we envision this company growing. So we're confident. I mean, when we ended last year, we talked about the pipeline, right? We said, look, there's over $70 million of deals in the pipeline. We're now closing on 20 million, and there's still $70 million of deals in the pipeline. And we have enough dry powder where I can probably see one or two more of these deals coming in. And we anticipate to at least do a few more, deals this year. And so as we go through 2021, just on the M&A front alone, we expect to blow through or at least get close to that revenue run rate you're talking about on an exit basis for 2021. Now, a lot of that, of course, comes down to
200 million.
Well, I'm at least closer to the, breaking the 100 million mark for sure, okay. and going beyond that. And so we're pretty aggressive in terms of the deal pipelines we have in front of us, and just knowing what we have coming and what we have available to us gives us that level of confidence. Now, organically, once you start to see that turn of organic revenue, sure, that starts to get even further. But what I think people should know is the depth of the U.S. market. This is a very large market with a lot of market opportunities. There aren't a lot of players playing in the sweet spot of the market we play in with the deal sizes we look at. And that just enables us to get more access to deal flow. And, we haven't really done any outbound yet. Everything has been inbound. We've been working primarily with sell-side brokers. And so, having to now start leveraging potential buy-side brokers and identifying deals, that just continues to expand that deal pipeline even more. And so what we're looking to do is to build critical mass by M&A at such accretive values and convert and organically grow. So we're building a business here that's going to demonstrate a lot of value in the next 12 months. It's going to demonstrate a lot of value in the next 24 months. And it's going to continue to demonstrate a lot of value for the next 2 to 3 to 5 years to come. And so, we're committed to this, and we've been in this from the start. We're happy to, tell shareholders that we're not selling, and, we're happy to put voluntary lockups in our own stock just to show the confidence that we know that the value here is not just short-term, but the depth of the U.S. market here is going to enable significant growth for quite some time. And it's, we're just going to keep looking to get stronger and get bigger and deliver faster and deliver more sizable deals each time.
Okay. Yeah, I think again, there is the U.S. market is what is it's a couple of $1 trillion.
Yeah.
The market. So
yeah, that's right.
Yeah, I mean, there's more than enough room for a lot of players in the U.S. market.
Of course. Yeah, of course. Yeah, there's a ton of opportunity out there. Okay. And so, like I said, we're seeing some competition, not a whole lot. And like I said, with such a vast market, there's so many specialties, so many areas of focus. Whether it's private equity groups or other individual practices. We're very confident in what our pipeline looks like and what our pipeline is going to project to be over the next 1 to 2 years.
Okay. So realistically, I think so the key takeaway here is really that you could the 2021 you could come out of this year with north of 100 million revenues, 150 million, possibly
on an annualized basis. Yeah, of course. And that's going to be our target. That's what we're driving towards. And we're in January already, and we're about a third of the way there. So we're looking good.
Okay, so really, we're looking potentially at a $1 billion plus market cap, very easily if you get. Once you start hitting hitting your stride, getting that run, people see that, they can extrapolate to $1 billion plus very easily, which is not, it's not a big And that's actually a very small number in the healthcare world. So
it's a very small number. I mean, look at some of the other comparable healthcare companies. I mean, they're generating anywhere north of 700 to 800 million USD a year in revenue, and they still believe that they're still in their first inning. So, there's a lot of opportunity to do good in the U.S. market, which is what we're doing. There's also a lot of opportunity to do well in the U.S. market, which will be the result of doing good. And so, we're very opportunistic, and we want to chase that value. And I think what we have to offer is going to be quite differentiated from what the U.S. market has today.
Okay, so basically, I mean, I'm looking at it as a stock could easily be 750 plus. I would say 9 months if the trajectory continues.
Yeah, I mean, look, Jack, our job is to deliver and execute, right? And we've done that all through 2019 in a way of profitability was a goal. We've done it through 2020 when we turned around and said growth is the goal. And like I said, we consider 2020 a warm-up, and 2021 is really where the game begins. And this is the first of many more to come. And we'll do what we do, which is, we commit, we'll deliver, we'll execute, and we hope that our shareholders continue to reward that growth and build trust in us as management, because that's ultimately what we can ask for at the end of the day is trust us to deliver and, continue to build the story together, and we'll all win at the end of the day.
Okay, let's jump into some audience questions. Okay, so the first question here is, where do you see organic growth hitting by Q4 this year? I'm not sure if does actually mean like, when do you
in terms of run rate exit, in terms of where we hit in terms of organic growth? Yeah, that's a good question. I mean, look, our models call for sort of within that range. Again, a lot of what happens as part of last year exiting organically, we talked about a legacy network of clinics that are transforming. We have an existing base of patients that are converting, where right now the unit economics are 150. We expect that to get close to 500 to 1,000. So we are still on time with that. Some of the clinics start to roll out this month, and they start to provide those services to patients. And that is part of the organic growth we target towards the end of this year. But of course, as we go through the year, we're also acquiring, and there's organic growth in those acquisitions as well. So I think overall, there's going to be a much more valuable return in organic growth, both from the previous legacy business as well as from the transactions that we're acquiring and making enhancements and opportunities for growth within.
Okay. Who's your biggest competitor? Is there who else is doing what you're doing? Like it's on a big scale like this.
So in the U.S. market, I mean, there are very few sort of public healthcare plays. You've got One Medical, you've got Oak Street Health. They're not typically M&A consolidators. Their focus is more in the area of organic growth, but they also focus on very different market segments. We play within a broad spectrum of primary and urgent care. We're on the fee-for-service side. We're targeting more of the population health in the suburban market. And we're obviously M&A focused. So typically for us, our biggest competitors today would probably be private equity groups who are also doing similar types of consolidation plays. But again, the value we bring is a much more liquid enterprise with more attractive multiples for raising access to capital and getting access to capital for making these acquisitions. And ultimately, our value at the end of the day is building a cohesive sort of independent network that differentiates itself from the larger health networks. And that's a really good way for us to show value to companies that want to sell to us and partner with us in their future growth too.
Okay, so that leads to a very relevant question. Do you have a target date for submitting a NASDAQ application? I think because again, just leading into what you're saying, I mean, if you are NASDAQ, this would be, all of a sudden, that would be very exciting for M&A. That really would put you on the map in the U.S., in the space.
Yeah, look, we want to make sure all the pillars to support a NASDAQ listing are there. And so it is in the cards. I can say that it's, within reasonable distance away, and we can see it. But we're also working on creating those right pillars of structure. And we've been, creating more opportunities to get exposure in the U.S. market. We look forward to potentially seeing, some further research coverage and support coming from U.S. Banks, getting in front of more institutional accounts, building that real, institutional support that will ultimately help a NASDAQ listing really mature and grow and get that value tied into what it is we're delivering on. And so we're doing both hand in hand. But like I said, it's very important to us to make sure that NASDAQ listing isn't just a one-time thing, but that we have the right team and strategy behind it that's going to help this value for shareholders really, rocket off and become something that we're all looking forward to seeing.
Yeah, I mean, it's not. I mean, yeah, I mean, it's not just being on Nasdaq, because all of a sudden now you're in a big pond. But at that point, you're going to have, the story is going to have to keep accelerating the pace.
Correct.
The scale has to be, is going to. But really, once you're on Nasdaq, all of a sudden, then you're really, for institutional investors, then basically you're like right there with 1M, Oak Street. So you're going to be one of those key stocks that they're looking at.
Yeah, and look, and Nasdaq loves these kinds of stories. I mean, look, we've seen it very successfully. Like one of our largest institutional private equity investors, Merida Capital. And Merida Capital is also a big investor in GrowGen. And if anyone has identified the GrowGen story, I mean, QX to NASDAQ listing, $3 to now I think they're $44. And it's a consolidation, strategic acquisition and organic growth within a different retail market, but very similar to our thesis, following in the sort of footsteps of our bigger GrowGen is, acquiring practices, making them, enhancing them, making them better, but buying them at very attractive values so that, you could do this all day long. And so you're seeing that reactiveness come in a market like NASDAQ to a story like GrowGen. Very similarly, we look forward to building a similar capital market strategy, but one that's going to appreciate the same story that Skylight Health is building within a healthcare market.
Okay, okay. So you said you can, do this, rinse, wash, repeat, process, scaling up. So I guess my question is what's in the way of you just, exploding, the next 6 months? Like, what are the constraints? Like, what would stop you from, doing, 500 million in acquisitions, which is actually, it sounds like a lot, in this world, in the TSX, OTC, but in the U.S. healthcare world, that's, again, it's nothing. So what's in the way of you doing 500 million in revenues of acquisitions the next, let's call it, 9 months?
Well, look, I think if we opened up all sources of deal flow, we will find them. They will be there. But like anything else, you got to make smart acquisitions, and we don't buy everything we see. We usually say no to most and say yes to the ones we like. And it takes time. Larger the deals, you want to spend the time evaluating them. You want to make sure they're accretive. At the end of the day, I believe we're here where we are today because we're disciplined in how we allocate our capital and what we buy them at. And so we're going to stay committed to that because, like I said, Jack, ultimately at the end of the day, it's trust. They got to have trust. People have to have trust in us as management to deliver on the promises we make. And so we're going to make sure that those deals line up with our metrics. They're the right deals. They're accretive. We know we can drive organic growth after the fact. And so that diligence process needs its own time. You can't take 9 women and make a baby in 1 month, but it's an idea that says, let's accelerate, let's grow. But each of these acquisitions brings on such an incredible team that we're getting faster, and we're getting better, and we're getting more impactful with the kind of deals we can close.
It's a real snowball effect. I mean, as you add more people, more talent, acquisitions. It's sort of that virtuous cycle, I guess they call it, the flywheel, right? That's the new thing that they're using in the tech world, the flywheel approach.
Look, we're going to move fast, but we're going to move smart. So,
Robert is asking, so all the clinics that you're acquiring, when will they convert to, I guess, Skylight full branding, or?
So with the acquired clinics, not always the case. And that's part of the strategy is we don't want patients to feel like they're part of one large corporate infrastructure. We want that community feel. We want the patient to walk in, know the staff, know their doctors, feel that one-on-one approach with their providers, have that physician autonomy. So acquired clinics, not always the case. Legacy clinics that are converting over into primary care, you'll start to see news around that this quarter. So that is in process. We committed to that last year in Q1. We are on time. It is happening, and we'll start to put some news out across that this quarter about those conversions of clinics and through the course of 2021.
Okay, we got a bunch of questions on the. Okay, hang on a second. Wait, Fred. Okay, stand by a sec. We had a little technical glitch here on Periscope. We're on multiple. Okay, so Periscope. There's an issue with Twitter and Periscope right now. Okay, a bunch of people asking about the subscription product you announced in December. That was the 199. How do you refer it? It's sort of like the 199 healthcare package.
So it's really a product that's targeted for the under and uninsured, right? So it's our solution to target the uninsured market, and it's a $199 a year subscription program that gives you unlimited access on telehealth to a provider for urgent care needs, and you can pay for it monthly, or you can pay for it annually. And I don't know if you saw recently, but the 3-year project Haven just got disbanded, and Haven, which was sort of call it the billionaire's approach to solving affordable healthcare, that
was Amazon, right?
Amazon, Berkshire, and JP Morgan, correct. And so, I think it really draws a need and shines a light on what needs to be done to be able to bring affordable healthcare access for patients. And so, we're very excited about what the program stands for. We continue to work through, the ability to bring this product to more patients. We're continuing to sign up new patients. And so the experience will lead to something great and big this year. We'll continue to keep building on that. But as a product, as a market, it is a very real need. Others are trying to solve it, haven't been successful, I don't think, at it yet. And, we believe we are, because again, this is based on a model that for us is relatively tried, tested, and true.
Okay. So yeah, I think there was some sort of issue with this Periscope, and a lot of questions just disappeared. So some questions I was going to get to disappeared. Blame it on Twitter. It's not us. Okay. There is somebody saying something about, okay, so there's a lockup. Can you explain the lockup that's in place? The share lockup.
Yeah. So, look, there's a certain level of commitment that we will always demonstrate as management, as founders. We've got large positions in this company, and we've never sold a single share to date. And so we're more than happy to communicate that, and we're more than happy to put it on paper. Let's put our money where our mouth is. We believe we know the story is going to go somewhere. We know where the value is going to keep coming. We want to show that value to shareholders. So, Cash, myself, the 2 founders of this company, we agreed. It's fine. We have no issues putting it out and saying, no sell. We have no interest in selling. And it's not like we're going to anyways, but I know it provides a sense of confidence for shareholders to see that as well. So that is something that we're always continually preaching to shareholders and investors, to say we are committed. We've always been committed, and we're going to keep showing that in whatever way we need to.
Okay. Brad, let's kind of wrap up here. I know we're probably going to have you back on very shortly, hopefully with some big news. So right now you have this deal that's going to basically close in the next few months, roughly, maybe.
Yeah, by the end of the first quarter for sure. Sooner is our goal.
Okay. What else do you have that's kind of what other kind of news flow can we expect for the next month or so?
Yeah, look, we're deepening our bench, so there's certainly going to be some experienced assets coming on board that are going to continue to further strengthen our vision and further strengthen the execution of our plan. We obviously have the upcoming conversion of our existing clinics. That's going to be news that shareholders can certainly look forward to. We're going to want to talk about some of this organic growth and development and how this is starting to work within the practices. So that's going to be something that we're certainly going to want to bring to market as well. And like always, we are constantly finding new partnerships, new strategies, and new growth models. And so that's we're nothing short of busy. That's for sure.
Okay. This goes back to subscription. So that $199 subscription. I get somebody's asking how many people have you? A few people have asked how many have you signed up. I think you just really started that. So when can we expect to see some numbers announced there?
Yeah, I know we have at least at the time being. So all the legacy patients that were there as part of the previous business have all been transitioned here now. So there's well over 100,000 patients as part of the program. In terms of new signups that are continuing to happen, those stats continually change week on week based on different metrics that we do. But I know that we're upwards of at least 1,000 or more patients at the moment. So, and that's going to continue to expand as we build on new strategies and expand it to more markets.
Okay. So, Brad, I'm going to ask you our favorite question, which we always like to wrap up with. At this moment in time, based on all the news, this acquisition, top 3 reasons that in your opinion, for investors to consider SHG stock today?
Sure. So trust in management. We've done this before in the past. Experience in building, and enhancing and improving and running profitable medical clinic operations, and a team that is just phenomenal at executing and delivering. I mean, I'm just here, the guy to talk, but it's the folks behind me that ultimately do what we need to do. And so, team and management, certainly number one. Number two, opportunities are endless. We're talking about a massive market, a multi-trillion-dollar market, where there's, a huge opportunity for consolidation, over 70% in a fragmented space. And we're demonstrating accretive, attractive prices and the ability to organically grow on each of these deals. And then lastly, strong base of operations to build on. I mean, we've strengthened the company financially significantly. We've improved on our balance sheet. We're in a great position from a cash flow perspective, and further moving forward, we're leveraging new forms of capital to be able to finance growth and bring more value to shareholders in a relatively less and less diluted fashion. So that's certainly three key reasons why I would put forward that, and we're just starting. That's what I keep saying. It's just the first week of January.
Okay, I'm going to ask you one last question. So if you had to use one word to describe 2021 for SHG, what would be the one word?
I use the word execution. It's time for execution. We put a plan forward last year. We talked about the opportunities. It was about positioning ourselves for realizing truly explosive growth, creating a market share in the U.S. that defines Skylight Health as a prominent player in the U.S. healthcare space market. 2021 is about execution.
Okay, perfect. Prad, thank you. We're going to have you back very soon, and we're looking forward to hearing about some more huge acquisitions. We need big acquisitions. I think that's what investors are looking for.
Well, Jack always has.
That's what they want. Immediately by next week.
I look forward to seeing you back on the show, Jack. I really do.
Prad, thank you again. Okay, fantastic stuff at SHG. We're looking for, I think this is going to be a big year. Let's see. Okay, let's get ready for our next presenter. Stand by. Just 1 second. Let me put this up on the screen. Okay, guys. Yes, let me just pop this up here. Okay, KABN systems coming right up. Feel free to continue the chat in the thing while we get this set up here for KABN. I think you're going to be very, very happy to hear from KABN today. The stock is up big time. Okay, I think we're almost ready. David.
Hey, Jack. How are you?
Fantastic. How are you doing?
Doing great. Happy New Year to everyone.
Happy New Year to you. Is this going to be the year of KABN?
Well, we hope so. It the first few days feel like a whole month. I think Prad just said sort of the same thing.
Okay, because this is what we're looking for: 100 baggers.
Absolutely.
10 bagger is very 2020. 100 baggers is the new 10 bagger.
Well, I can't promise you that, but we'll do our best.
Okay, fantastic. Okay, so I want to get you set. Can you tilt the? I think is it just the camera a little bit lower? I want to get more of you.
If I can do that, give me 1 sec to see if I can add something to the back of my camera here to maybe tilt it down just a little bit more.
Okay, yeah, much better. Fantastic. Okay, David, I see you great. And if we just get the slides up on the screen there.
Yeah. Okay, let me just see if I can get there. There we go. And can you see this okay?
Okay, hang on. Okay. I think so. Hang on, let's find out. Okay. Let's just advance one or two, just to make sure everything is working. Okay, perfect. Oh, fantastic. Okay. Okay.
Here we go.
Everything's looking good. Okay, so let me just get this set up here. So this is going to be, today is going to be kind of like I like to do like a slideshow every once in a while to give kind of investors the official story, and then we'll have you back for live chat when the next big news event. Let's see here what's happening. A lot of people on the live stream right now. Okay, let me just turn this over here and we'll get rolling. Okay. Welcome, everybody, to Wall Street Reporter's next Superstock live stream for January 7th, 2021. We are back with KABN Systems, KABN on the CSE, TRWRF over the counter for the American audience. And as always, our goal is to bring you those stocks which have that 10x to 100x upside potential. So again, these are companies that are going after multi-billion-dollar market opportunities. They have multiple catalysts in place to create shareholder value, and they're at a key inflection point right now, right at the threshold of explosive growth. So KABN has been working out very well. The stock was introduced, was it last month, I think, 15 cents. It's almost tripled, and now it's consolidating a little bit. Let's find out if this could be our next, 10 bagger or more. So the format is David is going to share his presentation for you, and then we'll open up for Q&A. And again, it's your questions that really make these events special. So please watch the presentation, ask David your questions, and then decide for yourself, if KABN is going to be our next 10 bagger or more. So with that said, David, I'm going to turn this over to you. And take it away.
Well, thank you, Jack. Welcome, everyone. This is a condensed presentation. We have a larger presentation on our website and a one-pager that everybody can look at. You can do your own due diligence. But we thought we'd give you a quick update on where we are and what's going on. So let's get right to it. So KABN is obviously a Canadian company listed on the CSE, the OTC, and the Frankfurt Exchange. You've got our disclaimer. Everyone can visit the website and read that. Let's talk about who is KABN North America. A little bit about who we are, our philosophy. We're focused in self-sovereign identity. That's a big mouthful, but what it means is allowing you to control your identity online, similar to what you do in the real world. And we'll talk a little bit about that. But we believe that identity is a basic human right, and consumers, not corporations, should benefit from that data and that identity. So we're all about empowering you as the consumer to control your online identity and control your online data. We've got an amazing team. The average senior leader in our organization has more than 25 years of success with proven results. We're obviously a publicly listed company. Now, some might notice that our US symbol is a gray. That came to us by way of our original RTO in June, and we're in the process now of looking at review of upgrading that symbol to the OTCQB potentially. Our business has massive reach. We're an early adopter, and we're highly scalable. Self-sovereign identity or identity is relevant to 100% of the online market, like search or communication or browsers. Everyone online is a person, and every person over time will need to verify their own identity. That makes it relevant to almost 400 million people in North America and 5 billion people globally. We're not saying we're the only company that will be doing this, but the market is so large that we have an opportunity as an early adopter, as a highly scalable company, to take advantage of this. Again, we're powering SSI in the marketplace. We're a steering committee member of the Trust Over IP Foundation. We're a member of the Lumatic Healthcare Exchange. We are involved at the source where identity, thoughts, leadership is being developed. We've got a great business. We got low CapEx and low OpEx. We've just finished some fundings that we'll talk about. So we're highly cashed up and ready to go. And we'll be delivering all our SSI programs in early Q1. We're in there now. We've got a unique business and revenue approach by empowering users with verified identity at no cost. Everyone who uses our services as a consumer gets biometric SSI with verifiable credentials at no cost. But in return, you become a known verified user. And on a permission basis, we never sell or rent data. We can bring you offers and opportunities where we might make a few dollars from each one. There's no fakes, no bots, no hacks in our system. One user, one account. And we focus on data, which is the new gold. Now, in 2020, we went public. And we went public on June 10th. By June 29th, we had announced our technology rollout. And you can see throughout this slide that we started making marked improvements every month. And in fact, in December, we really did quite a bit. We launched our biometric cloud-based services. We joined the Lumitic Exchange. We brought out a COVID-19 verifiable identity credential consortium with some leading companies. We started looking at our pilot for our self-sovereign identity and more. And in December, we were very fortunate. We announced a 1.15 million brokered deal with Mackey Research, and ultimately both brokered and non-brokered did over $4 million. The response was, as a good friend of mine said, diabolical. And we closed over $4 million in the midst of the holiday season. So we're very thankful that those that participated, and it will give us the runway we need to move forward in the next few quarters. So I want to talk about our premium product, or premier product, Liquid Avatar. Liquid Avatar is the ability for you as a consumer or a business person to create icons that you can share, like V cards and other factors. You can share what you want, when you want, and with whom you want. You're in control. It's your data. You're in control. We have a free suite of services that allows you to create an unlimited number of high quality avatars like you see here. Change colors of hair, skin tone, clothing, attributes. We also have something called the Liquid Avatar Marketplace. So for those that are familiar with gaming, we have a number of really amazing creators that are creating really awesome avatars that you can buy for a very small price. And eventually you'll be able to trade and sell those as well. They're very limited run. So it's all about creating value for you as a consumer and attaching that value to avatars. Right now, our avatars are two-dimensional, but I ask you to all stand by, and you'll hear in the next little while about how we're taking that to the next level. If we talk about our services, so what Liquid Avatar offers our customer base through the KABN network is biometrics, the ability to qualify yourself. Now, a lot of us are used to biometrics on our phone, but with our system, our biometrics are in the cloud. So if your device is compromised, your biometrics aren't. Our wallets, we have digital wallets that can carry a number of different things. We can carry identity, credentials, and give a consumer the ability to carry currency. We're not an MSB. We're not a bank. We'll talk about that. But you can control your wallets. And think about this. You may have credentials from governments and banks and schools and work. All of that will be able to be controlled by you within Liquid Avatar. Self-sovereign identity. Again, you control your identity and what you attach to it. We'll have data services and our verified identity services. We have an identity verification system that has been approved for use in our Visa product, which we'll talk about. And we've been running this now for about 3 years. Our users engage with the world. So we've got an addressable market of 100% of all the online and potentially real services. There isn't a category that we can't find a solution for. If you look at the various categories, from education down to sporting events, we cover all of it, because you as a person covers different markets and everybody covers different things. We have to be able to accommodate that. You as a person are interactive with almost 100% of these services, and we're able to help you manage that. We announced in December, this was one of our catalysts, that we have created a consortium to create a verifiable access and identity credential for COVID-19. So if you get tested or you have a vaccination, we're working with an ecosystem of partners that can verify your vaccine or your testing. We can create a credential out of that, and that you can prove that credential to a workplace, to an arena, to a school, as easily as showing it on your phone. There are safety nets and security built in around that because only you can use it based on your self-sovereign identity. And this is just the first of many credentials. We will produce prototypical and some early stage credentials, but there will be thousands and thousands of places that produce credentials. You'll be able to store and manage and manipulate and verify all of them through Liquid Avatar. This is really exciting. We've been working on this now for almost 2 years. Part of our situation is, and our goal is to empower our users to do more and more online. And for us to be able to be rewarded for that, we have to create innovative services. We're working with XTM to launch the KABN Visa card. We are approved in Canada right now. We're approved internationally, and we're already looking at opportunities in the US and beyond to launch our own Visa banking product in which we are the program manager. We are not the MSB, and it's powered by a banking solution. And it is an approved Visa card that can be used anywhere that Visa is accepted. You can load, do absolute direct deposit via checks, digital currency, P2P. And I know I've said digital currency. We don't manage digital currencies, but we have partners that can convert digital currencies to cash, and if they're approved, and then put that cash right on your card. So we have a way to create liquidity from various digital currencies based on our partnership program. Again, our card is accepted everywhere that Visa accepted in over 200 countries and 46 million merchants. What's really cool about this is our customers for our card and Liquid Avatar, regardless if you use the card, also are part of our KABN Cash program, which gives you cash back. And there'll be other announcements coming out about this to over 200. It should say 250. I'm sorry, there's an extra zero there. It's not 2,500. It is 250 merchants. And we believe there will be 2,500, but there's 250 merchants right now, major named merchants that you can go in, buy something from, and you'll get cash back. And we know that over 80% of Gen X, millennials, and Gen Z or Gen Z say that cashback offers linked to cards will then make them shop at stores. We offer a mobile banking wallet included in our product. You can track balances, daily transactions, multi-language, multi-time zone, and multi-currency support. We have instant alerts and transaction freezes, so you're not caught if you lose your card doing anything. This product can be used both traditionally and online. We expect to launch by late Q1, but you can sign up today. You want this card, and again, it's limited to Canadians as our test market. You can sign up at www.kabncard.com. And again, when you look at the market for card products and revenue generation, we cover the gambit of everything from Gen Z to baby boomers. We look at what they spend online, and we believe, again, as an estimate, again, this is a forward-looking item, that we could create up to $38 a year from each of our users just by bringing them recommended offers. Remember, again, we don't sell data. We don't rent data. We bring you the offer inside the app. And if you take advantage of that offer, you win and we win. How do we make money is through Liquid Avatar. We have a number of different programs that allow our partners to create opportunities within the Liquid Avatar and its marketplace. We have KABN Cash and KABN Card, and we'll have more revenue drivers as we move forward. For 2021, our goals and objectives are pretty clean. We want to focus on our marketing and communications, our business development, and execution. We want to be a thought leader in the self-sovereign identity space. We want to create and deliver products and services that have values to our customers, our clients, and our stakeholders. We want to strive to exceed the expectations of our stakeholders, to hold true to our philosophy and mission statement. The data and the identity is yours. You own it. Laws and rules around the world are proving that out. The market isn't being built for us. We want to be great team members, corporate citizens, and inspire others to achieve and succeed. Here's a bit of a sneak preview on what we're working on for 2021, and it's going to come pretty fast. We hope very shortly we'll be launching our open beta for Liquid Avatar. If you go to the Android store, you'll see Liquid Avatar already. It's not open for public consumption, and we're already approved by Apple as well. We're going to launch our COVID-19 verifiable credential, our SSI wallet program. Our Liquid Avatar marketplace is available today. Digital certificates of authenticity. That is the ability to connect a blockchain type credential to an avatar and allow you, if you want, to trade, sell that avatar. System enhancements for gamification engagement. We've got some really cool surprises on the way short term. Launching our product in Canada for Visa and launching our product initiative in the US. As we said earlier, we're reviewing our US symbol, and we're also looking at growing beyond the Canadian and US marketplace. So I'd like to thank you at this time for listening to the presentation. Again, there is more detailed information available on our website. So we encourage you to go there, go to liquidavatar.com, and really share the experience with others.
Okay, David, can you hear me?
Yes, I can. I'm just stopped sharing my screen.
Okay, so let's open up for some audience Q&A. Excuse me. It's not COVID. Don't worry.
Okay.
David, so I guess to me it looks like you have like right now, multiple shots on goal of, really a couple of verticals where these are all, potentially billion-dollar opportunities.
Sure.
I think so the main thing is, you have this so one of them is the you have, I think you put down around $38 per user you can generate annually.
Potentially, yes. I mean, we one of our senior advisors is from the the banking industry, and we've done this analysis time and time again. If you look at it, and you look at some of the free services out there, like creditkarma.com, they generate a substantive amount of revenue by giving away a free product, and then in return they bring up their users offers. Our offers are all contained within the app. We do or can market outside of that, but really, it's all about giving our consumers, our users, the ability to use our services and products for free. There's no hook, there's no upsell, there's no premium or freemium service, and then bringing them opportunities that might be enlightened by their lifestyle.
Okay, so I think the main thing that probably that the market wants to know is, what kind of traction do you have? When can we start seeing some meaningful, meaningful traction where people can then model out, okay, will these guys have, 5 million? Even again, we talked about this before, even if you have 1 million users, all of a sudden, once you get to 1 million users, people put a big value on these things.
Agreed. We have experience in the marketplace. I mean, we've built products before that have attracted hundreds of millions of users and worked with major companies to build those. So we have that experience. So we don't think of it as a sprint, it's a marathon here. So our open beta starts throughout the quarter, and then we'll expand it. We've already got relationships in place with gaming companies, insight companies, retailers. So we have access to millions and millions of users. I love the question that just popped up. Is it secure and can it be hacked? I'll come back to that in a second.
Yeah, we're going to bring up.
Yeah. But at the end of the day, what it really means is we have access to lots of people, and we're giving a secure, biometrically controlled way to manage their data and identity online for free. The addressable market is, North America, 400 million. Yeah, 5 billion. We only have to capture a very tiny slice of the market, and we are early and we are built. That's the difference. We are early and we are built. We're not coming out someday. We're coming out, tomorrow-ish.
Okay. So, I mean, what it is, there's let's say 2 billion internet users. Let's say there's 1 billion.
5 billion. There's 5 billion.
I mean, there's the numbers are okay. So, but let's just assume there's only 2 billion, whatever numbers. Sure. So 1% is what is it? That's 10. That 1% of 1 billion is 10 million. Even if you get 2 million people, 70 million, 20x.
Well, there's two different metrics here, Jack, to kind of consider. The first metric is what's the enterprise value? So what's the value of a user on a lifetime basis? And we all know this from communication and various other companies that there's an LTV. And we've done some comparisons. Again, we encourage everybody to do their own. But the comparison is that it runs from about $125 to about $1,000, depending on the type of services that our customers are using. So in an enterprise value, when you start talking about those kind of numbers and you multiply them by the user value, those numbers are immense. And then there is the performance, the EPS value, right? Like what's our earnings per share? So we're looking at the two metrics as primary KPIs. How many users are we bringing on board, and then what are they doing to generate revenue?
Okay, so yes, I guess that's the main thing. So when do you think we could start seeing some numbers, show up of those users, some meaningful numbers?
I think we're rolling out this quarter, so we're hoping to see great numbers. I mean, if someone looks at a consortium members for even the COVID program, they're going to see some very, very powerful groups. And one of them is an organization that deals with 2,000 college and university campuses in the U.S., and we expect to be doing something with them very shortly. So we have access to wide swaths of people. Our product is easy to download. It's light and friendly, and it takes only a few minutes to get engaged.
Okay. So we're talking about a couple months, 3-4 months.
The quarter we'll start reporting numbers.
Okay. Okay. So let's go into audience questions. So how secure is your system? Can it be hacked?
Well, the answer is I don't think anything in the world, and we've seen this, is absolutely impenetrable. But here's the difference. We don't own the data. We don't control the data. You own and control the data. When you join our system, you use facial recognition through our cloud-based system and start with a username and password. Those things, we hash your biometrics, one user, one account. So you can't have multiple accounts in our system. And we can't get access to your data because it's owned and managed by you and controlled by your facial recognition. So we've put some of the strongest, and we're just moving on from AWS into IBM because of the security at IBM.
Okay. So somebody's asking about the crypto. Is Coinbase amongst your crypto partners to convert cryptocurrencies?
Not at this time. We'll make those announcements accordingly. But again, that will be managed third party by that exchange. And if the exchange is approved by our banking system, we can take the money from that exchange and move it onto the card. But it is an approval process and having MSBs talking to each other.
Okay, so Uzair is asking, do you use your own security system for consumer protected data, or do you rely on a third party?
Both.
Okay. Kevin's asking, I heard that you led the initial e-commerce payment gateway for the Canadian banking system. How does KABN compare?
That is true. I'm sort of the granddaddy of e-commerce in Canada. In 1997, my first internet company developed the e-commerce payment gateways for the Canadian banks and the way that consumers use credit cards online. We actually built that technology.
Okay.
So when e-commerce didn't exist, we actually made it possible.
Yeah, David, I tell you, one of the things that kind of attracted me to the KABN story. One of the things that's very important is always, is the management, right? So, in your case, I mean, you're really a pioneer in these things, which are kind of like a little bit far out, where people don't quite understand yet. Like, I don't think a lot of people quite understand. Like, they didn't understand e-commerce. Well, in 1997, I was around in 19. I think a lot of people here in their audience were not even born yet. But e-commerce people didn't really understand e-commerce until maybe 2002 or something, or 2000.
Well, actually, the catalyst for e-commerce was Harry Potter. Actually, Harry Potter. Scholastic allowed you to get a book a couple of weeks earlier if you bought it online, and that actually created the spur for e-commerce. But the Canadian banks, being very different than the U.S. banks, were very hesitant
to do
Canada. And so we had to convince the Canadian banking system, and Visa and MasterCard to be able to do this online. And we worked, we had to be authorized by the NSA in the US to export 128-bit encoding. I mean, it was a very Wild West time. And it was, I mean, at that time, we weren't even controlling our own routers. They were rented. So it was, and then, in our second iteration, we created, automated translation technology, and we had a network of over 200 million people that were conversing on social media in multiple languages. So we've built ecosystems that have hundreds of millions of people before. So and the team is probably, undoubtedly the best team I've ever worked with. We've got some amazing people from backgrounds that know the business, know the public markets, know technology, and that's why we're able to work at this forefront.
Okay. Yeah. I mean, look, the way I look at these, micro cap stocks is that, it's very important to have, a CEO that has a vision, like a big picture vision, and, that's done exciting things before, and because, this could be, you never know, this could be the next phenomenal stock. I mean, look, recently we had a guy in the program who's, he's started a couple of companies, and then the next one was, a massive, it was like it became a multi-billion-dollar business. So this is very, very compelling. Let's see, any other questions here? I guess everybody's very shy today. No, that's
so maybe I did a really good job and nobody's got anything to ask.
You must.
But I will say something interesting. Like 3 years ago, when we looked at this industry, we basically took a stake and put it in the ground. We just locked it in the ground. And, normally you have to pick that stake up and continually move it to where you think it'll go next. But we've been very fortunate. We actually haven't moved the stake. The market is now racing towards us. I mean, I feel badly for people who have been affected by the pandemic, but ultimately, more people are online doing education. More people are online shopping, more people are online doing work, more people are online doing everything. And our business verifies everything and everyone. That's the opportunity. So, if you're gaming, we can help gaming companies, make sure that they're paying out tournament money to the right people. If you're in education, we can make sure that the right students are taking the right tests. I mean, the opportunity is unbelievable.
Alex is asking, when is the go live of the apps in the app stores, and is it available globally or just Canada?
It will be available globally.
Okay. Okay. So David, let's kind of wrap up here. Do we have something else? This is a good question.
Well, it's a really good question, but as a public company, it's hard to say. I mean, I don't want to give guidance here because it's important not to. But our goal, our internal goal is to try and get, a significant amount of users. And it doesn't take a rocket science to figure out, if you take the numbers that we presented today as potential revenue per person, and you take the other numbers that we talked about, $100, $125 to $1,000 per user on a lifetime value, it doesn't take a lot of users to get a lot of revenue or a lot of value in a corporation.
Yeah, I mean, I think the key milestone, for putting a value on the business, it's the revenues, really the user base. I mean, if you can get to, the first, let's call it 100,000, 500 million, and when the market sees those numbers, accelerating in the adoption, that's really when this becomes, a big story. Could be a massive success.
Right, and Jack, as we talked in the past. We went public in June. We kept it very quiet. Again, I applaud what your previous guest said. I have a 3-year lockup on my stock, so it's under a tier 2 escrow. So we're not sellers today. We're in the business to build a company. So we're not just here. We want to create ROI for our investors. That is so important. That keeps everybody engaged. And we're excited to see the performance in the last, 40 days. In fact, today it's a month, actually exactly 1 month. At 2:30 in the afternoon is when the stock started to move. And I think, you guys mentioned we'd be on your show. But so we're very, very excited about that. And that gives us opportunities to raise capital, and we're cashed up. But now it's all about, growth. If you asked me one word to describe our business this year, it would be growth. And growth encompasses our marketing and communication, our business development, and our execution, our 3 pillars for the year. So we're focused on providing stakeholder value because we're stakeholders. We're there for ourselves and for everybody around us.
Okay. So right now, really 2021 is the year of when the story actually, starts to gain traction. Okay.
Absolutely.
What kind of what other milestones should we be looking at? Let's call it the next 6 weeks. What else can we expect short term?
Well, we sort of said there's some enhancements coming, and I think I hope to be back very shortly to explain some of those. But we really want to take some really high-end technology and make it mainstream. I mean, there's been some very interesting applications that we've seen in gamification and engagement that we've been working on the last several months that we think over the next few weeks, people will be excited about. So I saw that our acquisition cost, that little.
This is a very good question.
It's a great question. So we wanted to make sure we had a way for people to get on easily and simply. So level 1 for us is come on, hash your biometrics. So, use our app. We take control of your camera for that moment in time, and we hash your biometrics. And then you use a username and password that you want to use. That's level 1. That cost of acquisition is very nominal internally. I will talk about external cost of acquisition separately. Then we have level 2 that if you want a verified credential, we do a traditional FinCEN, FinTrack recognized KYC and AML. We know that you're a real person with real credentials. We knew you were real when you did your biometric. Now we know enough to verify you for an identity credential. Then level 3 for us is adding what's called a proof of residence. That gets you into our banking schema and other services. That costs a little more. We're starting to talk a couple dollars per user of acquisition. But here's the kicker. People have to go out and market their services. We already have partners out there that are starting to market our services. So our cost of acquisition on a marketing basis is nominal. We're going to be doing very little direct to retail and a lot of partnered marketing where our partners will recommend us to their users.
Okay. Okay. So David, I want to ask you here, what's to wrap up right now, in your opinion, top 3 reasons why investors should consider KABN right now?
First of all, I think, as everyone says, it's our team. We have a phenomenal team, and everybody should take a look at it. And I think the second reason is our reach. Our addressable market is 100% of people online. And very few companies can say that because everyone will need identity services, and everybody will need to hold identity in electronic wallets. So that's a real open. And the third situation is we're very fortunate. We're now cashed up. We've just finished our financings, and we're ready to go. Our technology is built. We have low OPEX and low CAPEX. So I think those 3 reasons: team, reach, and ability to perform.
Okay. On that note, David, I want to thank you. And thank you, everybody, for joining today's live stream. And